In less than 5 minutes, I'm going to teach you the super simple secret way top traders predict the top moves in the market every single day, and you won't believe how easy it really is. And look, it's not magic, it's a matter of mastering supply and demand. And today, I'm going to spill the beans on how you can do it in your trading every day. Let's go ahead and dive into the guide of making the market work for you instead of against you. So we're going to go ahead and walk through trading liquidity for beginners so you have a better idea of how to predict market moves before they happen. And we're going to walk through why it's important, identifying zones, the psychology, trading strategies, common mistakes, and just simple continuous learning. Now, for those of you new to supply and demand, you have no idea what it is. Every single price movement in the market is a result of interactions with supply and demand. And so this past price action literally dictates whether price will rise, fall, or stay stagnant going forward. Now, does it guarantee profit in every trade? Of course not. It's impossible to have a 100% win rate, but this will ensure you are taking high probability setups with added confluence. So you have that much more chance of success in the market. So now what are zones? So zones are derived from liquidity. And to identify liquidity, most of the time you're looking for big reversals using wicks or just massive areas of projection on a chart. That can be from the upside or from the downside. And so we can see big movements to the upside or big movements to the downside to gauge liquidity. And so if we look at the wicks here, we can gauge liquidity again using these simple wicks off these highs here. Again, we have heavy supply. So again, we see sellers here off the highs with these massive topping tail wicks. This is an area of supply overhead because we have identified sellers. So we look at the chart here on the right as a great example, and you look where price has repeatedly just failed to break above, often with these wicks off the highs, or of course using candlestick rejection patterns, as you can also see here with the double top off the highs here as well. Using zones like this over just two-dimensional support and resistance levels, this gives you a four-dimensional look into the actual movement of price action in the market. So you can use that to help predict future price action because you have a better idea of what price is actually doing. And so this gives you a good relationship between buyers and sellers. I know what buyers are doing at this price. I know what sellers are doing at this price. Whereas support and resistance is just so two-dimensional and flat, you only see what's on the surface. And with this here, I'm able to actually see what actually happened at these price levels. And so by doing that, we can look at this and say, well, we have buyers at this price, we have sellers at this price, rather than just saying, oh, it's just a level. It's just a support or resistance level, right? This way we actually know what's happening at these prices. So why does it work? Well, like anything in the market, a majority of it is all based around psychology. And so in these areas of rejection, you may have greed, you may have fear, despair, so on, you name it. You know, of course, which are going to dictate these zones. And so, for example, if you look at the charts over here on the right, where we can see this here, we see massive buyers buying this up into the highs, consolidates, and then breaks out to the upside with massive buying pressure. Well, other people see that as well. You're not the only one in the market that sees that. And so people know, look, there are buyers here. This thing just popped up huge out of this breakout of consolidation. So if it pulls back again, I can assume buyers are going to be here again. So that's where that greed and hope comes into play. So again, that greed and hope, buyers come back in and buy this up back up through highs. The same thing applies over here to the right side on this right side chart. Again, on the drop chart here, you can see consolidation followed by massive sellers to the downside. Well, these sellers know, look, if this thing gets bought back up into the same area again where sellers just came in, I can expect sellers are going to be here again. And so then you get that fear, that despair coming back in here, and those sellers start to drive price back lower. And so people are able to look at, again, more, it's so much more than just simple support and resistance, because this way we can actually see where are those buyers, where are those sellers, what did price do in this area, give us that added confluence of what the market is going to do here going forward. Some of the most common ways you can trade supply and demand are using these two strategies here. Long side, you can do rally-based rally, or of course, short side, you can do drop-based drop. And like we just talked about back here, rally-based rally, you're pretty much just trading the trend with momentum, and again, taking those nice pullback entries into areas where buyers had confirmed previously. And of course, on the flip side of the drop-based drop, more of a short bias strategy, but again, just trading momentum to the downside. You see where sellers came in off the area of consolidation. You enter back up into that area with sellers with that super tight risk at the top of consolidation. And that's really why supply and demand is such an awesome thing, because again here, I want to play momentum here, but I obviously don't want to go chasing up into the highs. So I let this consolidate. I let this form this area of liquidity. Once it confirms the breakout, I know this area has an interest to the buy side. And so once I look back for these pullbacks back into this area of demand, my risk is just going to be the bottom of the zone here. And so what that does is it gives you an awesome area of defined risk, which generally gives you a low risk, high reward opportunity, like you can see here in this awesome example. And in real time today, actually beautiful examples of how to utilize supply and demand in your trading to a T on tickers like DWTX today, which is up more than 380%. And again, in doing so, we can see sellers here off these highs here around this $8 area. Well, price flipped and confirmed on the break here. And so now we know this area of supply now becomes demand. You can risk the bottom of the zone. Look, we knew sellers were here, but now we've confirmed above. So just like support and resistance, support becomes resistance, resistance becomes support. And just like in this example here, this area of supply now becomes demand. Giving you an awesome entry area here, risking the bottom of the zone. And that brings me to my next point here of breakouts and reversals. And that example on DWTX is an awesome example of a simple breakout strategy using supply and demand. Because of course, what you usually see with a lot of stuff like this is somebody will take a breakout, say of the 770 level here off this clean break of its hive day, right? And then go crying, oh my God, it stopped me out. The market knew where my stop loss was, blah, right? Because you're only using this two-dimensional way of support and resistance rather than looking at the big picture using areas of liquidity. And so that's why it's so important, because this way you give the market more room to move. You're not getting your stop sniped out in every trade you take. In doing so, and again, this stock is up more than 440% today, actually going insane. Low risk, high reward opportunity, and just a beautiful example here on DWTX. Again, a simple supply and demand pivot on that breakout over its time day today. And so once price breaks above a supply zone, as you just saw, it might signal a continuation of that trend. And so you can enter once it does confirm that new direction after breaking out. And of course, if price fails at those previous zones, well, then that can indicate another rejection or reversal off that high. But the most common mistake of using supply and demand is just focusing on just supply and demand. See, everything that's at your disposal should be used to your advantage every day to form A+ setups. You cannot put overemphasis on just one thing. I cannot take a trade purely based off of VWAP. Just like I cannot take a trade purely based off the EMAs, volume, price action, level 2, or just simply supply and demand. They all have to work together. That is what forms an A+ high probability setup. I need to have multiple pieces of confluence forming that A+ setup. So I need to have supply and demand backed up by the level 2, backed up by price action and volume, backed up by VWAP, right? All of these things come together and culminate into creating an awesome A+ obvious opportunity. And that is how I'm able to bolster such a high win rate in the market. What it boils down to is you just can't stop improving. Every single day, your goal is to just improve by at least 1% every day. And all of these pieces of the puzzle here have to fit together for that obvious A+ setup. But really studying price action and charting using supply and demand in more of a four-dimensional way gives you an awesome, more in-depth look at price action without being such a flat two-dimensional viewpoint like support and resistance is. It just doesn't work. And so it's good for starting out. Sure, you want to identify key levels, but supply and demand moves the market, so you need to be able to read supply and demand. We do have a crazy offer going on right now. You can actually watch me trade live every single day and get my full watch list, education, everything for completely free for an entire week. So make sure to head over to trademomentum.org, claim your 7-day free trial, and hopefully we see you there with the team. If you have any questions, let me know in the comments below, and of course hit that subscribe button. We are starting to post a lot more on YouTube going forward, so hopefully I see you in the chat room and in the next video. Hope you guys have an awesome rest of your week, and I'll see you then.